So here we have the chart. Look, we don't have that many levels. Here they are, the white and blue ones. I marked out the scenarios. And when we were at the price of 121,000, it was either we go up to a new high and then probably either a return to $117,000 or even to the 200 period moving average or maybe even the 300 period. Notice it happened exactly according to this scenario. That is, we touched the 200 period, touched this white level at $102,791 and the 300-day moving average. It was from this level that we saw the final reaction, such a massive rebound. Right now, the price hasn't just stopped anywhere. Notice, it stopped in the area of this high from May 22nd at the highest daily candle close. Back then, we had a correction, and the correction took us down to about $101,500 from around 112, let's say. And as long as this level hasn't been broken, we can't talk about a continued move downward. What else should we pay attention to? When the market experiences such massive drops, it becomes depleted. There's no fuel left below for further decline. What serves as fuel for a drop? Stop losses and liquidations of buyers. Right now, people are afraid to buy. Most likely, no one will be buying. And if anyone does, it will be very cautiously, and most likely, they've already learned from bitter experience and will use stop losses. That's why the market needs to accumulate energy in order to move further down. The probability that the market will continue to decline is, let's say, very high. Why? Because this drop and sell-off didn't just happen on the futures market, it also happened on the spot market. This means that someone was actively being sold to here at the price of 120,000, at 115, at 110. Well, actually, it's a debatable question as to how actively people were being sold to, but they were being sold to nonetheless. Which means they'll want to buy back cheaper. That is, if the price dropped this low on the spot market, it means there were sales at 109, at 107, at 105, and so whoever was selling will want to get their money back, and they'll want to get it back with a profit. There was a lot of selling, which means there were reasons for it. Most likely, they want to make more money, to collect more bitcoins from the market, and that's why this movement will almost certainly continue. But let's remove all the drawing tools. The ones with our distinctive color markings. We truly don't need them anymore, as they have fully served their intended purpose. Now, let's carefully look at something else entirely. The most likely scenario, the most probable scenario right now, looks like this. There will be some sideways movement here, possibly with a move into this area like this. Then, most likely, we will proceed to thoroughly test these crucial middle lines, and subsequently, after that, the downward movement will probably continue its trajectory. And it will continue at least into the area of this minimum, this little point right here. So I think that we'll see this kind of scenario. So, where are our middle lines? Right now, they're around the $115,000 area, maybe $116,000, but I'd say $115,000. Let's draw $115,000 here. This is the scenario. And I don't rule out the possibility that we'll see a move even lower. That's the entire analysis for today. I don't even want to look at any higher or lower time frames right now. Well, actually, it does make sense to look at the higher ones, at least at the weekly candles. Why? Because when such significant fluctuations happen, the market freezes for a moment and decides where to go next. Well, the market, meaning people. Because right now, even ordinary, everyday traders can't figure it out. They need to recover from the shock before deciding whether to open long or short positions. So I suggest we also wait for now and watch how the situation develops. How I see it, how I expect it to unfold, based on my professional experience, I've marked on the screen. But whether it will turn out that way, we'll have to wait and see.